Hey guys, it's Jack here from North Brisbane Mortgage Brokers. Today I thought I'd just do a quick video, give you a bit of a guideline on what you need to know and just some tips and tricks when you're purchasing your first property. One of the main things that we kind of look at and a lot of our first home buyers ask is interest rates. So what those interest rates would be or what they're available for. Unfortunately, it's one of those things that depends. Your deposit comes into play if you want a variable or a fixed. What I might just break down is the difference between a variable and a fixed rate product. Now with a variable, what that means is that your interest rate can go up or can go down. So the interest rate is variable. Usually that would change on an RBA decision, or maybe sometimes some banks change their variable rates. Now with a fixed rate, usually it's anywhere from like 1 year to 5 years, and it's fixed for that certain amount of time. The beauty with like a fixed rate product is makes budgeting so much easier. I know me and my wife, when we purchased our first property, we did a fixed portion, but we also had a variable portion. So what they call that is like a split loan, where you can get the best of both worlds. With the fixed portion, it was our first property. We just needed to make sure our budgeting was dialed in, and that's where we kind of looked at doing both. Now, there are pros and cons with a fixed. The perfect pro of a fixed product is you've being able to budget, you know where your interest rate's going to be for the next certain amount of time, being 2 years or 3 years or 5 years. But what does happen sometimes, if interest rates are going down and you've fixed it at 5% and now interest rates are at 4%, you've technically shot yourself in the foot because you're still fixed on that interest rate. It's for that certain amount of time. Exactly what happened to us when we purchased our first property. Our fixed rate was a little bit higher than a variable rate. Now, the beauty in that is that, yes, we were paying a little bit of a higher interest rate, but it was only for 24 to 36 months. So it wasn't the end of the world, but yeah, it's just one of those things where it is a double-edged sword with fixed rates. But yeah, it just kind of depends. This is where you kind of, when you go to your broker or go to your bank, this is where you kind of iron out those wrinkles. Another thing to kind of keep in mind is the type of home loan. So there are like basic home loans where you just get like a redraw product, or there are like the bells and whistle home loans where you would get a package product with an offset account and all the bells and whistles. One thing that we utilize a lot is an offset account. An offset account just offsets the interest that you pay to the bank. That's essentially what it is. So if my home loan was $500,000 and I had $100,000 in my offset account, I'm only going to be paying the bank interest on $400,000 because that $100,000 is offsetting the home loan. So it just makes things a lot easier. I highly recommend it if it suits your needs, but me and my wife, we found a lot of strength in that offset account, as it's kind of saved us money and we could put more towards our home loan and increase our savings as well. But one of the main things to kind of look into when you're a first home buyer is just trying to see if your income looks good, or if you have too many liabilities, or if you could do like a guarantor loan. These are just some things to kind of really ask your broker or your lender, or even give the team at North Brisbane Mortgage Brokers a call. One of the main things we do see is some first home buyers might have an Afterpay or a Zip Pay or a car loan. These kind of products actually do affect our borrowing capacity. If you had a big car loan and your repayments were pretty high, it will change how much you can borrow. It just really comes down to the numbers, what's coming in, what's going out. Guarantor loan, this is something we're seeing very common with a lot of first home buyers at the moment. Trying to save a 20% deposit is next to impossible. And then by the time you do save that 20% deposit, house prices have already gone another 100K or 200K more, and you're just constantly chasing your tail. So what we do see is a lot of guarantor loans. What that kind of does is, rather than you saving your 20% deposit, so if that could be $100,000, rather than saving that $100,000, we use a portion of that $100,000 from the equity of your parents' property. That's essentially how it works. There are a lot more intricacies in regards to a guarantor loan. Different banks also have different rules, so that they kind of assess it differently. So it's one of those things where it's kind of, we need to figure out if this suits your needs. But a guarantor loan, really great for not paying lender's mortgage insurance. Yeah, and trying to save that 20% deposit. It's one of the harder things to do. I know when me and my wife, we purchased our property, we didn't have that 20% deposit. we actually had to pay lender's mortgage insurance, but we've helped so many first home buyers that have had that guarantor support and saved them tens of thousands of dollars just in lender's mortgage insurance. But one of the other things that we do see is when first home buyers start looking to find a property, and that's when it comes down to you're dealing with a real estate agent, you're dealing with the broker, and you're dealing with the solicitor. So there's a few parties that you have to kind of keep in touch with, and there's a lot of things going around. One thing that we really try and hold our first home buyers' hand with is like your building and pest reports, something that you would definitely want to do for most purchases. It's a given. It's essentially, you're spending hundreds and thousands of dollars. You're better off just spending a couple $100 to do a building and pest just to see the type of property you're purchasing is solid. There's no major issues, or there's no major surprises when you do purchase your next property, when you do move into that property. But yeah, look, these are just some things to keep in mind when you are looking to purchase a property. As a first home buyer, there is so much to understand and there's so much to know. We always recommend to go see a broker, go see your bank, or even just give us a call. We're always happy to help. We're always happy to help.